Welcome. My name is Corey Ann Campbell, and I am the Small Business Consultant for Project Solutions. Myself and Greg Hansen, who is the Business Project Specialist and CFO for Project Solutions, will be presenting a training today on good financial habits. We're doing the training on behalf of the South Dakota Department of Transportation DBE program. Project Solutions has been the consultant for the South Dakota DBE program for some time, and so we're excited to be able to share with you a little bit more information about good habits that you can establish. Today in our presentation, we're going to talk about how to create good business financial habits through a standardized routine tasks. And so there's a little history behind why we established this presentation or this training, and Greg is going to tell us a little bit how it came about.
Thanks, Ann. I think a lot of it is just evolved over 20-some years of working with small businesses, trying to find some patterns of what are some of the characteristics of successful businesses. And we talk about these characteristics often here amongst ourselves. And the idea is we should make a video about that. We should make a training video about that. So here we are. So hopefully it's some of the things that you can use in your business.
So over the years, Project Solutions has identified 3 business management tools that are really critical, whether your business is small and you're just starting out or whether you've grown quite a bit. They are, first, the standard operating procedures to make sure that there's good SOPs in place. Also, a quote log is critical, how it helps you manage your pipeline and backlog, and then also the flash report and how your key performance indicators feed into that and give you a dashboard view of the information that is critical to operating your business.
The development of this material has evolved around the concept or I think of the reality that we've seen anecdotally and has been proven scientifically that a lack of financial information is a key hindrance to the development of small business. With that point in mind, we want to introduce you to some standard operating procedures that you can implement. Maybe you're doing some of these that we've seen that can help then roll up to quote logs, managing a business, a pipeline of work, and then flash reports, key performance indicators. So getting some standard operating procedures, some baseline activities in your business is where we're going to start.
So in other words, everybody performing tasks in the same way is the goal of SOP.
Yeah, exactly. And also when you hire new people, so they came from another business, another experience that may be different than yours, and you need to show them how things are done a little bit, maybe different in your business. So standard operating procedures. So hopefully you'll see something here that can use in your business.
So when we talk about SOPs, we don't mean seat of your pants. We're wanting to run businesses through standard operating procedures.
I'm sure a lot of people can see themselves there. I am flying by the seat of my pants, and depending on if you're getting going in your business, sometimes it feels like that. So if this is a formal documentation of standards, and you don't have to be that formal, but this is some tools you can use by using we call them standard operating procedures.
Well, and initially when businesses get up and going, I mean, they're probably just trying to get tasks done, get things organized, and it's probably really difficult to take the time to put together some of these tools, but it's actually really critical.
Right. Rarely do we meet a business owner who started out as an administrative person.
Yeah.
Typically he or she is an engineer, construction, they're in the field is where their roots are. And some of this other stuff is just not their comfort zone.
So when we talk about, what type of information should be consistently done, can we get into more detail on what those things are?
So if the goal is to have, the goal obviously is to have reliable financial information. With the preface to our presentation, that is one of the key holdbacks to small businesses. They can't get financing, bonding, etc. So. And we've seen that it's a very granular issue it starts at very small data entry behavior and techniques that are or are not being done in a business. So we're going to talk, how the bill is processed, how the invoices itself are processed. We're going to that the data entry level is where good things happen or not. So I say it's consistent. I think consistent is a good word in any business at any level. I think consistent is the goal of whether we're talking about financial analysis or the work that you do. Consistent is a good characteristic to look for in your business.
So in other words, like if you have details that aren't being done in the way that they should be done, just even like employee time cards, if like, a quarter of your employees are recording time one way and 75 are doing it a different way, it doesn't seem like it's that big of a deal until
you look at the financial reports, they don't make any sense.
Yeah.
How did those numbers get there? That's where we're at.
So for processing bills and invoices, I mean, it does seem like, well, of course, yes, it should be all done the same way, and it should be a good, solid routine. But what comes up that is it just a time thing? Like, where do business owners run into the problems that it isn't part of a daily routine?
Yeah. This one started from meeting several businesses that had a stack of paper on their desk, and so, well, what are those? Oh, those are the bills. I go, oh, well, we'll pay those. We'll pay those eventually, whatever. But they're not entered in the system. So they're not. They just once a month or twice a month they sit down and they'll pull those out and they'll pay them. They're not in the computer. They're not posted to the accounting system. Therefore, all the financial reports are inaccurate from the get-go. So if you do it daily, it's not that hard.
It becomes part of your routine.
Exactly.
And you make time for it in small chunks versus
Yes,
spending,
yes.
hours and
Yes,
hours and
yes,
hours trying
yes.
to dig out. So can we look at some examples? I think it would be good just to talk through like what an SOP might actually look like. Here's one on
Right. So this is just a template that we've written that we've shown with another business at some point. So if you wanted to write these or not, it's up to you. But this is about the mail. Sounds ridiculous, right? What about how to distribute the mail? But that's where it starts, that the bills are forwarded to the right person who has the authority to respond to it or needs to see it. Like bank statements. We're going to do a little slide here about internal control things, but the office manager shouldn't be looking at the bank statement until someone else does first. So little things like that. So.
Well, you could probably actually see how problems might arise too if somebody's not getting the mail, it sits on somebody else's desk, and then all of a sudden things, can kind of spiral out of control. So this just establishes this is what the routine is.
Trying to get trying to get some structure to your business that you can help. Makes it's not so daunting if you can do it. Just daily when the mail comes in, how to process it. So
makes sense. So another example, credit card, electronic transactions.
Right. We're becoming more and more of a digital economy, which is fine, but it creates challenges that you need to be prepared for. I'm sure this is something that you're seeing in your business, and you're wondering how do we handle it. So again, who can wire money, and who can pay bills electronically, and what documentation is required to go along with that. Construction companies, you have people out in the field, they need to have credit cards or debit cards or some kind of way to buy stuff that they need as they travel for gas or hotels and stuff like that. So, which is fine, but just have a process for how you want the documentation supplied to the office. Gasoline, have the mileage noted. Make sure that someone double checking that the mileage makes sense. If one would just have the internal control process that those things are being checked routinely.
Well, and I could see where you'd really have a problem, like for instance, if people, that do have the, credit card or whatever, they're not charging the appropriate project. I mean, that could really, if that's gone unchecked for quite some time, that could cause a lot of problems,
That's right.
I imagine.
Yes. That's just, so making sure they have a receipt, whether it's, by phone or someone takes a picture of it, but, anyway, and then make that just part of the standard procedures we're talking about, that anything you buy something, we need to have the office needs to have the receipt.
And then there's a double check there, and somebody's taken a look
Yes.
at what's happening too. Considering the last two examples that we spoke about, we thought it would be a good idea to add in a slide on a possible flow chart, how bills should be flowing through your company, and having that posted somewhere in your company would be really good for employees to be able to make sure that they understand the process and are following the process correctly.
Mm-hmm.
So could you talk a little bit,
Sure.
Greg, about this?
Thinking back to the previous couple slides about SOPs on this, I think we're all visual people. We learn better by visual aids. If a bill comes in, whether it's a credit card receipt or an invoice from a vendor or a job site, you have to decide if it is for a job, then the project managers can assign the cost code to it. Makes it easier for the bookkeeper. They don't have to guess. If it's an overhead bill, then it goes to the office manager or the owner, and they can say what that job is, what that cost is for. So follow a flow chart makes it easier for training.
So when we talk about, I know you mentioned a couple of times already just about internal controls. What have you, based on experience that you've seen at PSI, like what are some tips that you could give, things you should be looking for?
So what does bank reconciliation mean? First one. So that the bank statement is reconciled to the general ledger balance. So when we say, do you reconcile your bank account? Yes, at our home, we go through to make sure that all the charges are legit, but in a business, it has to you have to tie it back to the general ledger. If you're using QuickBooks online or the desktop version, there's the option to reconcile the bank statement. So it's critical that the bank reconciliation is completed. You can also reconcile any credit card or loans. We've seen a number of times where on the financial statement, the credit card has got a debit balance. And what's happening is they're making the payment is being posted, but the charges are not being recorded. And so you can reconcile the credit card and you get that fixed. So again, on credit and debit card policies, some companies will have five or 10 cards employees can use. So you need to have a policy on how to police that. Supply house credit. If you're have your superintendents or 4 crew leaders are able to go to the wholesale houses to buy stuff, make sure that they have guidelines that the supply house knows who can and cannot buy stuff. And there was a purchase order. This one came some years ago. A plumbing contractor was, as we were talking, saw an invoice for 3 toilets, and he looked for this particular project, and he goes, "There are only 2 bathrooms in that house. Why is there 3 toilets?" And that kind of snowballed into something bigger. Track miles per gallon, payroll timekeeping, clock in and clocking out. Whether you are using digital systems or not, you have to make sure that that's being followed, and who can approve time cards. Again, make sure account balances equals the general ledger. So those are the bank reconciliation procedures, so that the person who's in charge of all the bookkeeping is not doing all the reconciliations. There's got to be another set of eyes somewhere in that process, so that you can't have a person opening the mail, doing the books, and reconciling the bank statements. That's a recipe. That's not a proven pointing fingers at anybody, but it's just good business. And again, the bank doesn't think their tellers are stealing, but they do have processes they have to follow to ensure that things are being tracked accordingly. So
well, and there is such a thing as human error, and so having a
Sure.
path to follow to be able to make sure that there are second eyes on you're going to catch stuff. And quickly, if you're doing all these things on a regular basis, like in terms of your SOPs, I mean, there is more of an opportunity to catch things right away and deal with it versus, have a big problem at the end of the year.
For sure.
So another example, check signing procedures. I
Right.
mean, I would assume, like, especially if you're starting out, like as a small business, and maybe you've hired some people that you know real well. I mean, I could see where lines could get blurred, and it'd be really easy to just say, oh well, so and so, they can sign, no problem, I trust them. But can you talk a little bit about how that's probably not the best idea?
This one also roots to this SOP. The owner was going on vacation, and he signed 10 checks, blank checks, and gave them to the bookkeeper to pay bills while he was out of town. So that's a trusting. But it's just what if somebody else got a hold of those?
Yeah.
So the other thing, this one, I think, don't sign a check unless the invoice being paid is attached to it. That's critical. So you can see what it is that's being paid before you sign it. Same thing about credit cards. General ledger accounting. This is where data entry. That's where the good financial records that you can use for making decisions starts. And if you have over $5,000, you want to have 2 signatures or whatever, the bank will help you with that. But I think a person, you should have someone besides the accounts payable person signing the checks. I know people are small; they might not have a couple people in the office, but you need to break that up somewhere. Key thing there was make sure the invoice that's being paid is attached to the check before it goes out.
Well, and really, so a business starts out, they're small, but then they, do amazing and they have growth. Having these SOPs in place will only help, because as you get more people and there's more people doing things, that, you don't know people, you're hiring people that you don't have any, you don't know them. And so, I mean, having these things established would be a great way to just kind of position yourself for the growth that hopefully you'll have.
That's correct.
So when we look at consistent use of accounting dates, what's this one about?
Well, this QuickBooks has got a feature where the last date you entered will be carried on in your, so it makes it convenient so you don't have to re-enter the date every day. So if you inadvertently enter the wrong date, it'll follow you through the rest of your batches that you're working on. Another one is if it's currently the 10th of the month and you're working on previous months, you want to post it to the previous month, not today's date. Again, QuickBooks will default to the date that you're using. So same with payroll checks, trying to keep them in the window, the time frame of when their work occurred. The bill was printed on 12/1 for work in November. The correct invoice date is 11/30, not 12/1. So I think this is where you're trying to get monthly or quarterly financials, and you're not following these date cutoffs can warp your numbers significantly, especially if you have large projects that are invoiced the wrong months or the wrong quarter.
Yeah, that would be a huge problem if you had you're counting something in November that, or you're counting it actually in December when it should have been counted in November. You could see where that would be a huge deal.
Yeah.
Okay. So when we look at filing documents in the filing cabinet, I mean, this is the same whether you have like a server and you're filing documents in folders on, electronically. The whole point to this is really you have to be organized, right?
Right. It says this came from a firm that we met a long time ago. But it speaks to a bigger problem of they could not find anything. Nobody could find. It took hours to find a copy of an invoice. It's because the owner filed one way, the staff filed another way, and the contracts were in another folder, and the current folder was not filed front to back, back to front. So, and what you said, Ann, about digital, how are folders being routed on the server on your if you're having a network so that people can find them? You need to this could say filing documents in the filing folders on the computer as well as in a filing cabinet. So there's just some samples, some ways that you could set up your filing system. You know, Robert Smith Construction. It goes under S, not R. Or maybe you want to say
Yeah.
it.
Yeah, maybe you want to do
maybe
that.
Under Robert. Maybe you want to be under Robert. So,
Yeah.
so anyway, but however when you hire people or explain to them how you file.
So really with this one, it's like, however you decide to organize, the biggest thing is that it's consistent and that it's written down in a way that can be followed. And we have a couple more items in this example too. So just moving over to the rest of this example, I mean, this really drives home the point that it doesn't have to be a certain way. It just has to be consistent and frequent that you're dealing with this.
Yeah,
right?
and then everybody, and then the staff knows how to do it. And so if you have most file cabinets are 4 drawers, and here's a way you can do it. So whatever it is, like you said, Ann, just so that whatever you decide, everybody's doing the same way. Again, it sounds crazy, but it's just maddening when you can't find documents.
I think we've all had that.
Yeah. I don't care how big or small you are.
Yep.
So this is.
Yep, you just don't want to spend hours looking for something that you really need. That's the point. So when we take a step back and just look at the credit cards, vendor bills, and distributions, can we talk a little bit about the approval and coding?
Well, again, make sure the person who's in charge of that disbursement gets to see it, so that they're responsible for coding the receipts and the vendor bills. Thinking back to when our presentation started, our goal is to have financial information you can use to make decisions, right? And it starts at the data entry level. And this is a simple, takes very little time to do this. If before the bookkeeping person has to try to guess what it is, the person who's responsible for that purchase approves and codes the disbursement or the bill.
So we're going to get into third-party payroll or just payroll. So first we want to talk about, so say a company decides they want to hire another company externally to help them with the payroll services. Can we talk through, just like based on your experience, some things that you've seen and the pros and cons that go along with third-party services?
Right. So I think QuickBooks has done a great job of selling their services on their software. So they are a third party, and it can alleviate a lot of these issues internally. But here's just the pros of it. There's a list here. I think it's not really that expensive. I mean, if you thought about, it's cost less than a payroll bookkeeping person. But there's some drawbacks. They're not a replacement for your HR department. Your staff is still responsible for the timesheets and the employee setup, whatever benefits he or she gets, the pay rates and the overtime calculations. Those are on you. So they're just processing the paperwork. Responsibility is on your staff. It's hard to have access to payroll history unless you're using QuickBooks. If you're using QuickBooks, and I think 90% of small businesses today are using QuickBooks in one level or another. But if you're using a third-party payroll service that's not synchronized with your accounting system, then this is the biggie. Then you can't link the employee payroll data to job costs. So I think it's affordable relatively. They're trained. They know the tax laws, the due dates, so you don't have to initiate those payments, so that you don't get behind on the payroll taxes. So
it really comes down to what is good for your business. It's really like an individual decision based on the pros and the cons and where your business is at. So there's no like, you should do this, it's a great idea, or you shouldn't, it's a terrible idea. It's really just like, just make sure you understand what comes along with utilizing a third-party payroll service.
Right. If it's a like ADP, Quick Pay, there's several of them out there. But if they can't synchronize with your QuickBooks, you don't get the job cost, you don't get the history, and it's the information. You can go to the cloud and get it off of there, but it's cumbersome. So the alternative is then doing your own company payroll, and then we got the QuickBooks slide here, logo here. The pros are immediate access to employee payroll history. There's ultimately a better value, more control. Errors can be fixed immediately. You're not tag teaming with the HR staff at the other company, and easier to track benefits. Yeah, so if you are not using the payroll service to pay your payroll, your 941 taxes or state unemployment, any of those, the penalties are stiff if you're late. So the penalties start at 10% of taxes due, not annual, but 10%. So if your 941 deposits $5,000 and you're a day late, the penalty is $500.
Yeah. So
you better. I think from what we've seen, companies that do start using the payroll service is because they got behind, they forgot or didn't do it right, whatever. And they have the penalties. So just doing your own company payroll, QuickBooks. If you're using QuickBooks, well, I would recommend to use the payroll service. They set up to do your 941s. It prints the state forms, exactly compliant, and it's still less cost than a bookkeeper, depending on, like you said, depending on your size too. So.
Yeah, because it really comes down to like, where's your company at? What's your company makeup? Are you able to, attract and retain qualified staff with this type of expertise, or that's too much of a lift for wherever you're at? So it just comes down to, what's right for you. But I think that you've raised some really good points on things to consider.
If you're getting, over 20 employees in the summertime, the construction season, if you're 25, I think you need to have a dedicated person, because there's errors, and fixing people's paychecks it's a time.
Yeah, that sounds like that would be quite a nightmare.
That could be quite a nightmare. Yeah.
Okay, so the daily bookkeeping process. Can we just talk a little bit?
Yeah. So over here, create the invoices in QuickBooks. Now, if you do create them in Excel or the contractor's website, sometimes you're doing a pay request, right? You're not creating an invoice, but you still have to enter that amount in QuickBooks, in your accounting system. Don't post this revenue when you receive the payment. You want to generate the revenue when you create the invoice, and this is essential. Think about it. You did the work in November. You don't get paid until January. Well, and you post that as January revenue, not November. Think about how that does to your financials. It's just, so anyway, so that's why no matter where the invoice, whatever platform you're using to create the actual document itself, make sure you enter it in QuickBooks as an invoice for this customer. And I've highlighted some squares here, and this is, we're not going to go into QuickBooks, but there's some templates you can change them or move them around, some options. Make sure you know the taxes, if there's a tax, or you want to include the items. So anyway, just mostly I'll put that on there so that you create the invoice in QuickBooks with the date you did the service, not the date that you get paid.
So how do you know then if are you ready to create the estimates in QuickBooks?
Oh gosh, you have to be, yeah. You have to be able to, you have to have all your items set up, understand how they work, and how both sides, there's the revenue side and the cost side. Payroll item, you must have your payroll broken down by task, being able to do job costing in all your payroll. You have to be really comfortable doing the job costing in your accounting system. And then the person who writes the estimate has to be able to convert it to a form that can be set up in an accounting system. For example, there might be a contractor who says we charge $100 per linear foot for paving. Well, it's hard to create an estimate the cost behind that $100. So there is some conversion between your estimator and QuickBooks and your accounting people that needs to be done to be ready to create estimates in QuickBooks. So
it sounds like a great idea.
Yeah,
it is,
a great idea.
But it just might take a little bit to
right,
get there.
I think so. If we tried to equate QuickBooks to a college curriculum, this would be advanced.
Oh, okay.
Master's degree kind of stuff.
And it's important. I mean, for some businesses, they are going to get there, and it's going to be a great tool.
Maybe you're already there. Maybe a lot of what you were talking about, you said, got it, doing it. Maybe it is, but then when you get there, some really useful information for construction. A lot of reports are capable to be produced if you have the estimate in QuickBooks.
So, I think just talking about like everything, it just comes back down to like, what are you doing daily? Because whether you're ready to create estimates in QuickBooks or you're ready to expand, it just comes down to like your daily processes have to truly be solid for you to even get onto those other things. So can we talk again about daily bookkeeping?
Well, again, using QuickBooks because I guess it's by far the most widely used software. You have to don't take the shortcuts. QuickBooks has so many ways that you can avoid the processing if you just don't use the write checks option. You should always enter the bills. So those are part of your daily bookkeeping processing. That you don't use the shortcuts. Use the AP, AR, and payroll modules the way they're intended. Because you can go around them and do some shortcuts and.
Well, and what do they say? Garbage in, garbage out.
Kind of, yes.
So if you don't take the time on the front end and you're not doing things daily and you're kind of rushing through it just to get it done, it probably in the long term it's not going to be very helpful.
Tough. It's hard to unroll that when it happens.
So, and again, we keep talking about why it is so important to have effective SOPs, and really the recipe is that you have to be diligent about it daily. There has to be commitment to doing it, and it has to be consistent.
Yeah. And then whether you formalize it the way we've laid it out here for you or not, but just talk to your team. That team may be you and your partner, but if you're going to scale your business, eventually you're going to hire somebody, whether you plan on it or not. Getting it laid out now between yourselves, your team, which is maybe one or two people. It can start here.
So now we're going to talk a little bit about quote logs. And so we're going to get into why quote logs are important and what they should look like and those things.
A little history on this one is a number of times we meet businesses and we'll say, how many bids did you put out last month or last year? I mean, I don't know. Maybe we did 5 or 10 last year. How many did you win? Oh, and they have to think. And they really weren't at the revenue they thought they should be at. And I said, well, shouldn't you write more? If you want to grow your sales, don't you have to write more bids? And that kind of was a light bulb moment for some people. Like, well, I guess so. I'm not sure what they thought was going to happen in their business if people were going to call them, but they really didn't have a plan to monitor it. So, but actually, on paper, they mentally did know how many they bid, but they didn't know was that it's not enough.
So really, I mean, in other trainings, we've talked about like goal setting and strategy. And so really, this is kind of, a very foundational step that you have to have, because if you're wanting to create like projections and you want to have forecasts and you want to be able to know, how you're going to grow your business, it's almost impossible to do that if you can't accurately track what exactly, is happening currently. It's really hard to turn around and project like what capability you have to grow and that, and what resources you'll need is the point.
Well, what resources you'll need for sure. And this is just a kind of, it's a no-brainer way of working towards a goal. If you want to do 10 million or 5 million, how many bids do you have to write to get to that level? Yeah. If I want to do 5 million, I need to hire 2 superintendents. I need to buy another piece of equipment. So it's just I think mentally most people are doing something like this, but it's not documented. And then at the end of the day, they're not really sure of what they need to do to get to the next level.
So here's an example of what a quote log might look like, right?
Yeah, this is just done in an Excel spreadsheet where you just list every job that you consider that you want to bid on, and you can put down your estimated margin on the job. And this little illustration, one job is pending. We bid 30,000, estimated cost is 20,000, and then the computer will calculate the total on the side. So again, think about if the goal is 5 million, whatever your number is, 1 million, how many proposals do you need to write to get there? And if you're willing to bet, you might need to bid more than what you are right now, if that's your goal.
Well, and so really, it's not that complicated. Quote log, it doesn't have to be that complicated, but the key thing is that it has to be written down so you can see it on paper to be able to get a true handle on what's going on.
If the businesses that they're not happy with where they're at, usually can't answer these questions.
So a little bit closer look. So after you've entered all the information into the quote log, here is what you can see.
Right. You can, how many proposals, we how many lost, won, how many, we didn't, if you want to throw it out or long shot, we bid on something we didn't think we'd win, just thought we'd get in front of another customer, etc. How use it any way you want. They're just if you can make yourself a little more structured and you write down every bid you put out, I think you'll find a lot of information that could help you manage the backlog. So if you want to be able to get through the year and through the off season, you need to have a certain amount of work to get there. And this is a systematic way of doing it instead of just hoping enough comes in.
Well, and the other thing too is like if you're bidding on all of these projects and you're not winning and you have a really not a very good win ratio, then that might tell you something about the bids as well. Right.
If you I don't want to suggest a benchmark, but 10%, 20%, if you're winning less than 10%,
there might be something wrong.
I think there's something wrong.
So now we're going to talk get into the flash report, and we're going to talk about key performance indicators and just what those are. And can you talk a little bit about how, especially with PSI doing work with lots of clients, like how this has been so critical in terms of, being able to manage financial performance and forecast and all of those things that businesses need to be doing?
Well, hopefully you've implemented the standard procedures so you're running financial reports that make sense, and you can develop your own little dashboard, we call it a flash report, of key performance indicators. And not all of them are necessarily financial. There may be some operating KPIs that you want to talk about. So KPIs are widely used in a variety of industries, but we've got a dashboard here that you can use that monthly, sometimes weekly, you can have it updated. So now that you're, like as I said, you've got your financials in your hand, your team's been working on it, and they're accurate. You compile this information into something you can use in a weekly, at least monthly analysis for sure.
So just, talking a little bit more in depth about this, what are things that typically come up, like that are really important that should be tracked to help you, drive good decision making?
Well, liquidity, and liquidity, of course, is access to cash, so that you don't run out of cash. Businesses,
Don't want to do that.
there's profitable companies that, very profitable companies that do run out of cash, and they get into a tight spot. So that's one of them. But also productivity. We got some suggestions coming up here that this is not stuff that's shared with part of your loan application. This is just internal information that you can use to monitor the job costs and the performance in the field. The line of credit is a good indication of cash flow. So you can customize it for a variety of ways that suits your business.
Taking a look at some examples of KPIs, they're different for every organization, but what are some that would be ordinary that people would be using in their financial reporting?
Here's some good ones that could be on your dashboard, some KPIs that you want to track of. How many miles were billable versus the fuel purchases you made? Nice to know how much is overhead that's not billable. Direct labor versus overhead labor. What's the breakdown? People hired versus people terminated, inventory purchases divided by sales. You kind of get the idea of what are some of the things that you could use in your business that you'd want to put on your dashboard. Down here at the bottom, working capital. I think we have coming up a presentation that might work for you and your business as an example of a dashboard.
And so really it just is up to the individual business on the things that they want to track. I mean, at the end of the day, there's things that they typically should be looking at frequently, but then there might be other things that
depending on the type of business you're in, for sure, yes. And so this is one we've put together on some of the most common KPIs or things that are being monitored. Your bank account. Think about it in the wintertime, how important it is to manage this closely. Kind of checks you had been written for overhead or payroll, accounts payable, aging of the accounts payable, same with accounts receivable, and you haven't past due, does that need to get attention? Line of credit activity, I think, is a good indication of cash flow. If you're using your line of credit to get through the season or paying it down, that's a good KPI to have on your dashboard. Another one, productivity and backlog. How many purchases for materials did you have? Where were the sales in the period? Another big one we talked about a while ago is backlog. Don't let your well run dry. Track that number to know where you're at. That the backlog is going to be enough to feed the company through the end. Now, as you fill the cells out, the spreadsheet calculates your working capital. It's interesting to watch on a week-to-week how that changes.
Well, really, the idea is, correct me if I'm wrong, that if you're looking at this frequently, it's helping you make decisions, but it's also maybe helping you catch some things that there might be some mistakes or other issues going on. Is that the purpose too?
Yes. For example, if special or significant checks, if you bought a piece of equipment, it was $120,000 and you wrote a check, well, you want to, that's not the whole picture, right? So you want to segregate those out. So it is one of the tools that you're going to use with your key team members. This is not something that you use in your business plan, but just you and the key people on your team. That might be just your spouse, depending on how big your company is, but you get the idea that this is information that has to be shared if we're all working in the same direction of the company.
So we wanted to make sure that we put information into this presentation about taxes too, just because it is really important this area of your business. So.
Yeah, this is unfortunately a lot of businesses now are LLCs or sub-S corporations, and the owner oftentimes will take a small paycheck. They don't distinguish between a paycheck, which is a W-2, like a regular employee, or just a draw when they write themselves a check for a personal use. So a check written to the owner that is not deductible for tax purposes, unless it is written or run through the payroll or is subject to federal withholding, Social Security, and the taxes are taken out. And here's the pickle, maybe some of you can relate to this situation. The company's taxable profit is high, but the cash has been drawn out by the shareholder as a draw or a loan, and as a result, the profits are high, and there are significant income taxes due, and potentially little cash left in the business to pay it because the owner has used that as a draw to pay his or her personal expenses that year. Not that you're taking too much of it, it's just it wasn't enough planning, and yeah, so checks or disbursements made or bills paid on your behalf for your personal use are not deductible for tax purposes.
So taking a look at exactly what that might look like.
Right. So
this does the math for us.
This is so the owner took a small paycheck during the year, leaving a net income of $40,000, but the owner has taken 30,000 of it. So of the profit, the owner's taken 40,000 of it. But the taxable that owner's draws is not deductible. So now you can see that the taxes are due is 10,000. Cash available to pay it is 10,000. Then there's
you're going to end up with zero.
It's very common. Yeah, it's very common to owners do that. They will take a relatively small paycheck and then use draws. They'll take a draw when the company has the money. But just be prepared. It's to have a tax bill that could be impactful to your situation at the end of the year. And then usually, in the year, the call usually comes on April sometime and says, you need to deposit X dollars in the bank for last year's taxes, and you go, oh my gosh. So
yeah, that would not be a good situation.
Yeah, that would not be good.
So other considerations that we would want to talk about that should be maybe thought about, like in terms of SOPs and daily tracking. Can you speak to some?
Well, I think safety, having a documented safety program. Many of you probably do. Fortunately, your workers' comp usually will require something, but document is the word. So who was there at the meeting? So we can do a whole topic on that one as well. The care and maintenance of equipment. Job costing, equipment costing, and separating your personal financials from your business financials. And again, depending on if you're starting out, they're probably commingled quite a bit, but you want to get to where you have an arm's length relationship with your business, that the activity in its books are not related to you. It's not your private checking account. You get a draw of some kind. So. And I know a lot of you probably think about it and have heard that before, but I know that it's a good habit to develop is to try to use the word arm's length so that the business stands on its own and so do you.
In conclusion, today we covered how to standardize routine tasks to create good financial business habits. And I think we covered a lot of great information. We have a lot of good tips. What are some other things that you'd want to add?
I think this is another tool that a business owner should be using. As I said at the outset, this is some stuff we've seen from years of talking to literally hundreds of businesses, things that they have done that seem to make it run smoother. We call them SOPs, but this is something that people do routinely. They don't even think about it secondly because it is standardized. So if we can take that away to have you help develop some consistency in your business by standardizing office procedures. Managing a pipeline of work by using a quote log. Don't let your company run out of work. You want to be way in front of that so you know what you've got to do to keep feeding the machine, as they say. And then you can use all that on critical information, KPIs we call them. Create your own dashboard. We gave you an example of what you can use. But anyway, and these are 3 distilled, simple, easy to use processes a business can do in their business on the financial side of their company. There's a lot more to a company than financial side of it, but this is something that can help you grow to the next level if that's your goal.
So in summary, we want to just thank you for your time today. There's other resources. We spoke throughout the training about other training resources that we have available. Project Solutions is the consultant for the Disadvantaged Business Enterprise Support Program for the South Dakota Department of Transportation. We have our contact information here. Feel free to reach out and talk to us, and hopefully there's something that we can help you with and get you more situated with the things that you're working on.
Yeah, hopefully there's some good takeaways for you in watching this presentation. We appreciate your watching and hope to meet you again soon.